The rand weakening yesterday afternoon a little bit, back up to 6.73. This morning, back below 6 rand 70 against the dollar, though we have seen the dollar also retracing against the euro at the same time.
Morning, Stephen. Yeah, the rand wobbled a bit yesterday. It looks like it was on the back of concerns over an imminent withdrawal of global liquidity. The rand has benefited quite significantly from global liquidity because it supports the carry trade. So yesterday, after China indicated that it would be raising its benchmark lending rate, and then we also had some quite hawkish comments coming out of the Fed that raised investors' sense that there would be a normalization of monetary policy in the US. It seems that concerns over global liquidity saw the rand take a little bit of a knock, but as you mentioned, it has come back quite strongly this morning.
We have seen commodity prices perking up again as well, and that's helping to support the rand, I suppose. Wouldn't you have expected more of a reaction to that Chinese rate hike?
Well, I think you've answered the question right there, Stephen. It does seem that the rand continues to benefit from commodity prices. So despite concerns that may have emerged yesterday over global growth as far as China hiking its interest rates is concerned, the rand didn't take as much of a knock as one might have expected under the circumstances.
How about commodity prices, though? Because you might have expected commodity prices to come under pressure with China hiking rates. Why are we not seeing that sort of reaction in the market?
Absolutely, Stephen. At this point, it seems that despite the fact that China has hiked rates consistently, global growth momentum is still quite strong, and we're not yet seeing the effects of monetary tightening coming through significantly in Chinese production data. So that will certainly be something to watch over the months ahead. But at the moment, it does seem like the Chinese economy growth has moderated somewhat, but certainly isn't slowing to the extent that might spook investors, and so we see commodity prices still remaining quite firm. Of course, expectations that Japan will have to rebuild after the earthquake may also be playing into higher commodity prices at this point.
Well, you mentioned some of those Fed officials becoming slightly more hawkish on monetary policy in the United States. We did have Chairman Ben Bernanke, though, saying in those FOMC meeting minutes that the spike in inflation that they might be starting to see in the United States is likely to be transitory. So they're not really worried about the medium-term inflation outlook, are they?
It doesn't seem that Fed officials are worried about that at the moment, but you must remember that they do unofficially target core inflation, which excludes measures of food and energy. So for the moment, that it seems to be on track in the US. Also, we haven't seen a spike yet in inflation expectations out of the US. So it seems that the Fed is fairly comfortable at the moment as far as the US's inflation trajectory. But of course, it does raise questions, particularly in light of the fact that the Fed seems committed to see out QE2. There are concerns over a medium-term outlook for US inflation because, of course, the excessive liquidity is likely to show up in inflation down the line. But at the moment, it seems that the Fed sees the risk to inflation and growth evenly balanced, and so no imminent change in policy stance there.
Nomvuyo, we have the Bank of England and the ECB starting their two-day meetings today, and with those meetings we also get some data coming out. We have the European Union GDP fourth quarter revision. We also have the UK production data coming out today, manufacturing and production data. Do you think they could actually swing the decision when we get those meetings out tomorrow?
Stephen, I don't think that this data is going to be able to swing the decision, but what will certainly happen is it'll make the post-meeting discussions a little bit more interesting, particularly in the ECB where they actually hold a press conference. Should there be a revision in growth, this is for the fourth quarter, it's not what the market's expecting, but if there is an upside or downward surprise in terms of that revision, it could certainly play into how the ECB sees growth in the Eurozone unfolding thereafter. As far as the UK is concerned, we would of course have to wait for the BOE to release those minutes, but I don't think that today's data would necessarily play into tomorrow's interest rate decision.